This is a lecture from Open Tuition. For the free lecture notes that go with this podcast, please visit opentuition.com.
Where do we start? P7, it's a step up. It's not much of a step up, actually. It's not much of a step up from F8. F8, some of you had problems with F8, I understand. But F8 was... Did you have problems with F8? No. F8 is asking you typically about detailed audit steps that you would take in order to confirm the figure for tangible non-current assets, or what audit procedures would you adopt. And it treats you really as an audit junior, whereas P7 is treating you as a partner or a manager, or even as low down as a senior in charge of the audit. So you're advising your junior staff what they should be doing. And it says, what matters should you consider? There's a typical question in P7 that says, what evidence should you expect to find on the audit file, and why is it important? Or identify the procedures that you would expect to be evidenced on the audit file, or identify the procedures that should be adopted. And a key element within this, or before I go further, I had an incident with my car this morning as I was driving in, the oil warning light came on. So I stopped in the snow on the forest road, and I happened to carry a can of oil with me, because just in case that sort of thing happens. And it did. But I also carry a container of coolant liquid that cools the engine, because I'm having problems with the coolant system. So I stopped and left the engine running because I didn't want to get it cold. And I undid the oil cap and started pouring, and I poured the wrong one. I poured some coolant liquid into the oil, but I realised it pretty straight away. So I stopped, obviously, and went back and got the oil thing. And still the engine's running, and I poured the oil in, but it spat back at me because the engine was still running and the things were still taking. So I've got oil dribbles on my shirt. All right, so I do apologise for that. I didn't have time to go home, so I'm an oily shirted lecturer today. One of the questions that she asks is, state the matters you should consider and the evidence you should expect to find on the audit file. And a regular comment from the examiner, whose name I am not allowed to tell you, I'll explain why in a moment, a regular comment from the examiner is that the markers are reporting, for instance, if you talk about debtors circularization of receivables, the students are writing down things like, if there's no reply, telephone the receivable to get direct confirmation by telephone. Well, that's not evidence you would expect to find. It's a procedure, isn't it? It's not evidence that you should expect to find. But you can convert that very easily. You could convert that and say, there should be a record of telephone calls made to receivables to confirm where there has not been a response to the first request. So it's only a little step. It's only one small change of emphasis within the words in order to convert a procedure into evidence, or equally to convert evidence into a procedure. But you don't score marks. If all you do is say telephone the receivable to get confirmation by phone if they don't reply, you score no marks, because that's not evidence that you would expect to find. If you look at an audit file, you don't expect to find telephone to, it's a procedure. So you pay great attention to the specific requirements of the question and the verb within the question. The verb indicates the level of answer that they're looking for. If they're looking for a deep answer, then it would say analyze, for instance. It would say analyze the situation, or critically appraise the situation, or justify the arguments for. Well, you're not going to score any marks if you start justifying the arguments against, whereas a critical appraisal is both for and against. So the verb within the question is phenomenally important, and it would say so in any study material that you read, any of the publishers, whether it be BPP or Kaplan, it will pay great attention to emphasizing this importance of the verb which is used in the question. We're going to be spending this next 3 days going through the course notes, as a result of which we should then be in a position on the next bit of the course, the next part of the course, to start looking at some of these questions and answers. I mentioned to Indra before the rest of you came in, I mentioned that the answers that you see in the published textbooks, the published revision kits, are unbelievably long, and there's no way that any student, and I'm not criticising any of you, but there's no way that any student could even begin to dream of scoring answers or writing answers of that length in an exam under exam conditions with adrenaline flowing and worry about your families and wondering whether this is going to happen to you tomorrow and whether you want to go and watch Skyfall or not. You're not going to be able to do it all within the 3 hours. So pay attention to the printed solutions, but don't pay such great attention that you think my answer is nothing like, or I've only scored half the points, or I've not got anything like the length of the printed solutions. You won't do. You won't be able to. And so accept that as a given, that we're not going to be able to write as much. There is a basic principle to all ACCA exams, and particularly these written ones, P1, P7, F8. The written principle, the general principle that I like to apply, and it seems to work, is that if there's 20 marks in a question, you need 20 separate markable points. They've got to be 20, and you've only got 36 minutes to do it. A 20-mark question, 36 minutes. You've only got 36 minutes to think, to read, to think, to plan, and then also to write. And so the points that you make should be 20, and you're not going to have a great length of time in order to be able to write those points out. In a 20-mark question, it's my suggestion, whether you believe it or not, or whether you follow it or not, is entirely up to you. But it's my suggestion that, in, for instance, a 20-mark question, if you divide 20 marks by 2, that gives you 10, and that's the number of minutes you should be planning what you're going to write. So that's 10 minutes of planning time out of a 36-minute total. It means you've only got 26 minutes left to write out your 20 points. That's 1.3 minutes per point. How much can you write in 1 minute 18 seconds? It comes down to, it's not rocket science, it comes down to common sense. How much can you write in 1 minute 18 seconds? You don't have to have any thinking to do other than putting it into English. That's the only thinking that you have to do. But the physical activity of writing out for 1.3 minutes, 3 lines, probably, maybe 4, 2 sentences. That's the approach you have to take to maximize your opportunities, maximize your chances of scoring 20. I know we don't want 20 necessarily. We don't want to be a big star, do we? Are we looking to be the big star in P7 auditing? Or are we simply looking for a 50-mark pass? But don't forget that the points that you write out, not all of them will be scoreable. The marker's going to look at them and say, no, maybe yes, or possibly. And in that situation, you aim for 20 and be happy with 15. Be happy with 14, because there's probably 10 of those 14 going to be acceptable. The exam itself is changed, the rules have changed, not the rules, the structure has changed just recently, just this last time. So the exam now is 2 compulsory questions, one for 35 marks, which is a big question, and one for 25 marks. And then 3 more questions, 20 marks each, you do 2 of them. It wouldn't be unusual to find a question that says, identify the matters you should consider and the evidence you should expect to find. It wouldn't be unusual to find a question about audit reports and how will the above matters impact the audit report, and maybe even what sort of report would you give. Would it be a clean report? Would it be an emphasis of matter? Would it be a disagreement or an uncertainty? So you need to be fully aware of where you're going with reference to the impact of various auditing problems which have come your way. In addition, it's necessary, I'm sorry, but it's necessary that you have a good appreciation of IAS's, the International Accounting Standards, because it's often the case that the problem that is given to you is an accounting problem, and you have to then audit the accounting problem and identify what would be the correct treatment, and therefore if the directors are reluctant to change what they are proposing to do, then you need to identify how that will impact on your audit report. Another relatively recent change that the examiner has introduced is that you are the audit senior, the senior in charge, and the partner has emailed you and said, and the email will be given to you and say, I've just come back from the preliminary audit visit, and these are problems which seem to have been raised at that meeting. I'd like you to consider blah, 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 and what would you recommend? And you find yourself in the unusual, impractical position of making recommendations about auditing to the audit partner. Those of you who do work for audit firms will realize just how impractical this is. I can't imagine you writing emails to the audit partner recommending what should happen. Do you do that? Do you recommend to the audit partner what you do? Do you sometimes, or every time? Yeah, you're okay. All right. Well, that's good. So this is P7 students. You've risen above the F8 level, haven't you? Okay. The emails that she gives you, the examiner gives you, there's probably an email from the partner to you, and the partner will copy an email received from the client where the client has identified some problems. Again, if I just have a look at the question book, we'll just see. There we are. I'm looking at question 11 in this book, a question called Medics, and extracts from a notes taken at a meeting you recently held with the finance director as shown below. You're the senior audit manager, and these are your extracts from the meeting that you've had down to there. And then an extract from a local newspaper concerning the company Medics and about the problems that Medics is facing. So it's not unusual, and they're long questions. A 35-mark question is going to be a long question. It's going to be a lot of reading with a lot of facts included within it. Just let me say before I forget, dates become phenomenally important. Dates have always been important. In all your exams they've been important. I'm thinking about F7, where dates were important, about dates of acquisitions of subsidiaries and associates. I'm thinking also about F8, where there are some dates about you attended the client 3 weeks after the year end and you started writing receivables letters. Dates here are important. This extract from the local newspaper was dated the 2nd of June 2008. And this one is about a meeting held on the 1st of June with the finance director. The email is the meeting notes. So dates are very important. Pay great attention. The information within a question is given to you not because the examiner wants to fill the question up and make it longer. The information is there specifically for you to use. And the technique and the clever and the cute P7 student will identify all the important bits within the question and make something of them, bring them into an answer so that you're scoring points all the time. Still within Medics, this is a 34-mark question. Before the structure changed 35, 25, 20, 20, 20, this is a 34-mark question. But of course it's not a 34-mark question at all. There's a stem, which is this page and 2/3, but then there's part A, part B1, part B2, and part C. So 12 marks, 4 marks, 6 and 12. Each of those, it is essential that you attempt every one of those parts of the answers. It is absolutely essential. To miss off part C because you run out of time is unforgivable. You're not going to pass that question. You're not going to get 17 marks out of the available 22. It's not going to happen. So you have to attempt every question, every part of every question. And again, this time allocation principle works the same. This 12-mark part A, identify and explain principal business risks, 6 minutes of that is planning. 6 minutes of that 12 marks. So it's a 21.6-minute question, and 6 minutes of that has gone because you're thinking about how can I raise 12 points on identification and explanation. So time allocate amongst or within the answer itself, not just overall the answer. It's not just 34 marks, that's 61.2 minutes. You've got to time allocate within the question itself. Another thing to bring to your attention is that first part, part A, identify and explain. Using the information provided, identify and explain the business risks. There'll probably only be half a mark for the identification. The explanation of the business risk will be another 1.5 marks. You're looking there for 6 business risks. Half a mark for identifying, 1.5 marks for explaining the business risk, and that will give you the 2 marks available for each of 6 business risks. And it comes down to cold clinical Science, really, identify where the marks are. See where a marker is being instructed to award marks. And it's that little word "and" which causes problems. That little word "and" is actually a two-part question. Discuss the relationships between the concepts of business risk and risk of material misstatement. That's a 4-mark question. It says discuss. How much of a discussion are you going to have for 4 marks? 4 marks without thinking, without planning, 4 marks is only 7.2 minutes. What sort of a discussion can you have in 7.2 minutes? You married people will know that a discussion can take rather longer than that and often goes over into the next morning. That's what discussions do. Identify and explain the potential risks of material misstatement. And then finally, for 12 marks, prepare briefing notes to be used by an audit partner, assessing professional, ethical and other issues to be considered. That's P1. P1 comes into P7. P1, P2, F8, F7, they all come into the P7. It's a sort of conglomeration of all these earlier exams. Maybe even F4, maybe law can be brought into an answer in P7. So it's a cumulative thing, and there's no boundary that says that was asked at F5, therefore it's not going to come into P7. All your learning, including today and tomorrow and Friday, all your learning is cumulative. You're about to become, you're 1 step or 2 steps or 3 steps possibly away from becoming a qualified ACCA, competent and qualified to be Chief Financial Officer of the biggest conglomerate company in the world. That's where you're going to be. Come on, Ivana, don't look depressed. It's probably easier having children. Much easier. Okay, so that's where we're going to be going. I've got here some accounts which are up-to-date accounts. They're from the company Devro. I do want these back at the end of 3 days. But these accounts are probably more applicable to P1 studies than they are to P7. But they do indicate the sort of thing which... Look at that one that Ivana's just turned to. Just turn to page 15 of the Devro 2011 accounts. The principal risks and the uncertainties is an identified element, identified inclusion within the printed financial statements. I don't think you'll get that sort of thing over here, will you? Do you have that sort of thing within your own company financial statements or within the financial statements of the companies you audit? You do? That's all printed out there in the better companies. And key performance indicators, Ivana's turned the page there. The next one is corporate social responsibility report. And I think the page after is key performance indicators. Oh, the next page after is the directors. There's interesting as well. I showed you Devro accounts when I last saw you, I think. I showed you Devro accounts from the previous year. And now you've got a picture on page 18 and 19 of the Board of Directors and the Executive Committee. And it's changed. The Board of Directors has changed, and the noticeable change is the 4th one. That now they have a woman on the board. They never previously did. There's a recent recommendation in Europe that by, I think it's 2015, it might be 2014, by the end of 2014, all public companies should have at least 40% of their board members should be women. This has got to be a positive move. It's got to be an approvable move that 40% of board directors shall be women. Well, Jane Lodge is a non-executive director. You'll notice she's a chartered accountant. And Simon Webb, just above that, he's a chartered accountant. On the executive committee, there's Alan Kirkpatrick, he's a chartered accountant. There are jobs in there, you know, for chartered accountants, for qualified ACCAs. There are jobs on the board waiting for you. The financial review and key performance indicators on page 12 and 13 health and safety, the number of injuries requiring treatment by a health professional per million hours worked. It's improved. Last year and the year before was 12.5. This year it's only 7.6. The Corporate Social Responsibility Report, again, it's more P1 than P7, but Corporate Social Responsibility, where the company's identifying, it's on page 16, identifying how they are reducing their waste, their environmental policies, how they performed in 2011, the good news and the bad news. On page 21, in this printed set of financial statements for Devro, on page 21, there's just a short paragraph towards the end of corporate governance. But if you look on page 22 to 27, there's 5.5 pages of corporate governance report. And that clearly is P1. But it's also, and does come into, it comes into P7, it also comes in, strangely, to P2. That how is the company performing with reference to corporate governance? It's normally been my practice to say, for all exams, your examiner's name is, and your examiner writes articles in Student Accountant, and these articles you must read in Student Accountant. There are other articles which are relevant, which are written other than by examiners, and they are important, but not as important. It's always been my principle, my policy, to say you have to read articles written by the examiner. But as a result of death threats to the F5 examiner following last December's exam, within the last 3 months the ACCA has said we no longer publish the names of our examiners. So I can't tell you who the examiner is for P7.
What happened?
The death threat wasn't carried out. It was a tough exam at F5. It was a tough exam last time, and some students were rather overwhelmed with emotion and were very upset and said this examiner needs to be shot. And so as a result of that, the F5 examiner was not very happy. They did read those comments and mentioned it to ACCA, and ACCA said, we won't tell people who the examiner is. So now I can't say, if an article is written in the Student Accountant, then I can't say you have to read this, because the P7 examiner's name is not now known to the world at large. So I can't say that. So if there is an article in Student Accountant and it relates to P7, then you must read it. It may be written by the examiner, it may not. You have to read them all. Which of course you do anyway and have done for the last 2 years, 3 years. Yeah. Okay, let's get into the notes. We should be able to get through these relatively quickly. There are some questions and there are some answers. Just let me get to the start of the practice questions. And it tells me that there are only 99 pages of notes. So that's not too bad, is it? We should be able to get through that. 99 pages of notes, we should get through that within the 2 days, so it means that by Friday we could start looking at some past exam questions and seeing how you would tackle them and whether or not we can get those 35, 25 or 20 points. So I'm now on page 1, Rules of Professional Conduct. This is basic, this is F8. A lot of this, I'm going to hop back into the contents page. Contents page is about page 3 in the notes. Rules of Professional Conduct from chapter 1. This is pretty much F8, but so also is professional responsibility and liability, and the regulatory environment and practice management. These are F8 revision, audit process, evidence, evaluation, review, audit of financial statements. It's only when we get to Chapter 9, group audits, that this is new to the syllabus, the auditing syllabus. The group audits were specifically excluded from F8, and so it's the first of the inclusions. The external audit report is F8, audit-related services is new, and assurance services is new, prospective financial information is new. But internal audit we came across at F8. Outsourcing we came across at F8, maybe not to the same extent. Social and environmental audits, I don't seem to remember that being in F8. So you'll see that there's not a huge amount, maybe half the notes are additional to what you should already know from your F8 days. But we'll sensibly review them and sensibly revise them, and so I'm back again on page 1, Rules of Professional Conduct. They apply to all accountancy students, to graduates, accountancy graduates, and also to members of the ACCA and any other recognised accountancy professional body. The objective is to ensure proper standards of professional conduct are observed. There was a case recently where an Ernst Young partner, and I don't want to pick on Ernst Young particularly, but where an Ernst Young partner was severely reprimanded within the near vicinity of where we're standing now, severely reprimanded. He's managed to keep his ACCA qualification, but he's no longer an Ernst Young partner. There's another case, rather more recently, within the last 4 weeks, where a Deloitte audit client, audit banking client, has found themselves in trouble and is closing. Has closed, suspended operations. Yeah? Rules of professional conduct should prevent that happening, because we're all intended, looking at bullet point number 4 there for fundamental principles, they carry out their professional work with due skill, care, diligence and expedition, with proper regard for technical and professional standards expected of them. And it's not a difficult suggestion for me to make that the possibility has got to be raised that neither the Deloitte partner in the recent event nor the Ernst Young partner in the previous event has satisfied that requirement. They've not carried out their professional work with due skill care. By giving unqualified audit opinions on inadequate audit work, then it seems they're in breach of that fundamental principle. The objective is to ensure, I'm back in the first paragraph, the first bullet point, the objective is to ensure proper standards of professional conduct are observed. We have fundamental principles, but we also have specific guidance statements. The fundamental principles are effectively rules of life that accountants should follow. This is the way our life should be governed. For instance, we should behave with integrity in all professional, business and personal financial relationships. You should not be seen to be prepared to bribe a policeman when he stops you for speeding. You shouldn't be prepared to do that. It shouldn't even cross your mind. Now, I know from looking at your faces that this is the sort of thing that doesn't happen to you, but trust me, it does happen in this country. I do know that it happens in this country. So whether or not you do, you shouldn't do, because you should behave with integrity in all professional relationships, personal financial relationships. Integrity implies not merely honesty, but it's also fair dealing and truthfulness. You should strive, you should try to be objective in all professional and business judgments. Objectivity is a state of mind which has regard to all considerations relevant to the task in hand, but to no other. So you focus on the task and you maintain professionalism, and you are independent in your thought, and treat each matter that you come across in your auditing career, or in the auditing exam for those of you that are not auditors. You should be focused on that particular audit problem and not be considering other matters like your own personal welfare or even your own personal reputation. Your own personal reputation is going to be called into question if you fail to be objective in your work. You don't accept or perform work which lies beyond your immediate competences. So If somebody asks you to perform an assurance service and you have no experience in that assurance field, then you don't accept the work. You say, I'm sorry, I can't do that because it lies beyond my immediate competencies. There is a relaxation there that if you are prepared and do buy in those competencies from someone who is competent, for instance, a man who's in charge of the earlier bank liquidation that I was talking about, is an Englishman who is well experienced within the field of bank liquidations. So if there are no immediate competencies within your firm, then you buy in those competencies in order to carry out that work. Point number 4 I've already covered. You carry out your professional work with due skill, care, diligence and expedition. Expedition, if you remember, to expedite is to speed up. The verb to expedite is to speed up. So expedition means speed, and I'm not talking about the drug speed. Expedition means speed, that you don't delay, you don't take unnecessarily long time to carry out a professional task, and with proper regard for technical and professional standards expected of you. And finally, behave with courtesy and consideration towards all those with whom you come into contact during the course of performing your work. This demands that you should be courteous and considerate to me. You've got to be kind and gentle with me. You've got to treat me with respect. You've got to... Don't look at me like that. Courtesy and consideration towards all those with whom you come into professional contact. And then specific guidance statements. These deal with specific areas where independence may be threatened. There's guidance statements on integrity, objectivity and independence. Professional duty, confidentiality, changes in professional appointments. There are rules to follow. I know in this part of the world the professional rules with reference to changes in appointment were not followed in your neighbouring country up north. They were not followed until relatively recently, certainly within the last 9 years, that when a firm of auditors was being changed to bring in some new auditors and get rid of the old auditors, the communication between the former auditors and the new auditors was very difficult. In fact, the local Chamber of Commerce here has just changed its auditors, and the previous auditors are very reluctant and have been reluctant, almost obstructive, in giving information which was necessary. For instance, receivables, accruals, prepayments, the tangible non-current asset details. This information has not been available from the former auditors, so the new auditors have had to start from scratch and reconstruct the figures which were in the previous accounts. Books, documents and papers. The guidance statement there, very briefly, very succinctly, very shortly, it simply says that the books, documents and papers belonging to the client belong to the client, and you have to pass these over when your appointment is changed. And corporate financial advice and conflicts of interest. These are specific guidance statements, and we'll look at some or all of those as we go through. The first one, independent objectivity and independence. It would be nice to be able to quote these things. If in the exam it is appropriate to talk about independence, it would be wonderful to be able to say, the rules of professional conduct state that a member's objectivity must be beyond question. This can only be assured if the member is and is seen to be independent. It would be lovely to write that sort of thing down in an exam. I notice one or two of you are putting a circle around there as being important, but it's all important. If you look at the study text and compare it with the course notes, you'll realise that the course notes are very much abbreviated and very focused, whereas the study text can go blah, 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 and say that same sentence over 2 pages. Example 1, common threats to independence are undue dependence on any single client or group of clients, overdue fees, family and other personal relationships, beneficial interests in shares and other investments, acceptance of goods and services or hospitality. What practical steps can a firm take to maintain independence in each of these situations, to ensure that the firm and the firm's independence is not threatened or is not jeopardized How can a firm practically take steps to ensure that they retain their independent status? Well, this is a question for you. This is not a question for me. What practical steps can a firm take to ensure that they are not unduly dependent on any single client or group of clients?
So maybe have an independent audit team.
An independent?
Audit team.
I think by definition the audit team is independent. How do you mean an independent audit team?
Yes, but some people may have interest in the company.
Well, the interest in the company, I think, comes down to family and other personal relationships and beneficial interests in shares and other investments, doesn't it? What practical steps can we take to make sure that we're not so heavily dependent on a single client or group of clients? What practical steps would a firm take? Have a lot of clients, yeah. Have a lot of clients, all right.
So that you do not have one.
Well, I think the expression undue dependence, I hear what you're saying, and I think you're right, but I think the expression undue dependence is actually relating to fee levels. That if I have a big client, I really don't want to lose that client. I really want to make sure that whatever happens, I do what the client wants. And if I'm in that situation, then I'm no longer independent. I no longer have an independent attitude of mind. So the way in which, a practical way in which firms can seek to ensure and continue their independence is by saying that no client shall represent greater than, well, generally speaking, 15% of a firm's fee income. But if it's a public client or a public interest client, then that percentage falls down to 10%. So no fee income from any client or group of clients should exceed 10% of the firm's income, if it's public company or public interest company. Overdue fees. We're in times of hardship at the moment, aren't we? Cyprus particularly is struggling at the moment, but Europe itself. Oh, I heard on the radio this morning that the next one in this domino effect of European bailouts, I heard on the radio that Slovenia is next in line, that the questions are being asked about Slovenia. So it started with, I've forgotten who it started with now. Who did it start with? Greece, and then it spread to Spain and Italy and Portugal and Ireland. Now Cyprus, Slovenia. There's going to be nothing left. It's going to be Estonia supporting the world. Who are the BRICS? Do you know who the BRICS are? That's been on the news this last 2 days. The BRICS countries. It's the emerging economies. It's an acronym for Brazil, Russia, India, China and South Africa. And they're in a summit meeting at the moment in Durban in South Africa. And they're going to form their own BRICS bank, which is going to be their equivalent of the European Central Bank or the IMF, the International Monetary Fund. So overdue fees. How come overdue fees be a threat to independence? Again?
If you have significant receivables from your clients.
If we have significant receivables from clients, why is that a threat to independence? Identify and explain. Explain.
It could be treated as a loan.
You treat it as
a loan.
Yes, it's maybe that the client treats it as a loan. I don't think the audit firm would like to treat it as a loan. But if the client is... The threat to independence arises because if there is a substantial overdue fee from a client, then can you imagine the mental process of the auditor when faced with the fact that they're now having to start the 2012 audit and the interim work has not yet been paid for? We visited the client in October and November last year, and that we sent a fee note, and the fee note has not yet been paid, and yet we're up against a deadline. We have to finish the audit by the end of April. We're about to start the final audit, but this fee note is still outstanding from October. If the client wants something to happen or wishes to disclose something within their financial statements, and the auditor says, no, that's wrong, the client then says, well, we're not able to pay your fee note from last October. If you want that to be paid, then you'll have to see these things our way. So overdue fees are a way in which a client holds a monetary influence over the auditor, and maybe to the extent that the fee which is outstanding is so great that the only way the auditor could guarantee receipt of that money is by complying with the client's requests. And in that situation, the client has got you. The client has you under the client's control. Family and other personal relationships. I think family relationships are obvious, aren't they? Any one of you should not be involved in the audit of a company where a close family member is an employee, or particularly a senior employee. Well, it should be declared. The declaration tends to come in the next one with the beneficial interest in shares and other investments. But I imagine that you auditors have to sign annually a confirmation, a declaration that says, I do not hold any shares in any of these companies, and the client companies will be listed. And that's a practical step that the firm can take, is to make sure that there is a positive declaration, and of course we have to believe it because we're honest people, we operate with integrity and honesty. Personal relationships is a little bit more difficult. Family relationships is relatively straightforward. You can simply confirm that no member of your family works at this audit client. But personal relationships, particularly for the possibly the junior members of the audit team more so than the senior members of the audit team, because as a junior member of the audit team you're at that age where maybe you're not married, and maybe you're the only people that you meet of the opposite gender, or even the same gender these days. Maybe the only people that you meet are people in your workplace or at the clients. And if you're looking for a personal relationship with a client, with another person, then where else would you look except maybe at the clients? So it would not be unusual to find members of an audit team dating members of the client's staff. From a personal point of view, I know I did, but I was only a junior, and before I was married, I have to say. So it's very difficult. The difficulty really arises where the person that you're dating is a person of some seniority and influence with the client, because in that situation the hormonal drive, which possibly affects men more than women, may cause the male auditor to vary their independent attitude. So family and other personal relationships, confirmation by the members of the audit team that they don't have any family members at the clients, or they're not in any personal relationship with senior personnel at the client. Beneficial interest in shares and other investments, that's a clearly obvious one. And it does happen, people do, and people go on audits, or people, I believe, there's always bad people, there are always people who do lack integrity in any group, and even in the professional group of accountants. So it is potentially available that a member of an audit team could use inside knowledge about the results of the client. They're auditing the final results. The results are not yet widely known. They're not in the public domain. The results look extremely good, and the temptation is there to buy shares in the client and make a secret profit, which of course is illegal. It's a crime. It's not even a civil wrong. It's a crime to use that inside knowledge to make a gain or avoid a loss. Beneficial interest in shares and other investments requires a declaration from the members of the audit team to say, I do not, nor will I, have any beneficial interest in shares or other investments. An acceptance of goods, services or hospitality. I see that you're all using a pen which has just been given to you. That's a gift from an audit firm. But what if the gift were from the client to the auditor? What if you had brought some of your products in and spread them around the room for the benefit of your auditors? Is that gift acceptable? Well, it's of minimal value. It's of insignificant value. So probably yes, if you brought in a range of sweets from your firm, your company, then that would be acceptable. If you brought in biscuits, which I'm expecting tomorrow because I don't like those there, then that would be acceptable. But gifts, acceptance of good services, the examiner is going to make these gifts, services and hospitality rather more excessive than just a pen or a calendar or a pad of paper with the client's, with the company's letterhead on. It's going to be holidays abroad. It's going to be free use of the client's timeshare in Miami. It's going to be something substantial like that. And of course, auditors should not accept it. They should refuse. I was speaking with a senior from Ernst Young about 3 years ago, and she was telling me she was at a client, and the client was so pleased with her work and her diligence and understanding that they brought her a large jar of honey. And they said, here's some honey for you from the board of directors. We think you're wonderful, and please accept this as a gift from us. And she said, I can't accept it. I can't accept it because I'm not allowed to accept gifts and hospitality from audit clients. He said, oh, come on, a jar of honey, it's nothing. I said, please accept it. So at the end of the audit, she put the honey in a corner of the audit room and walked to her car with a briefcase. And the chief financial officer came out, running out to the car park with her jar of honey. He said, you've forgotten your honey, you've forgotten your honey. So she sat in the car and phoned the office and said to the office, they're insisting I have this jar of honey. What do I do? Do I leave it in the car park or throw it away or thrust it back at the chief financial officer? And the partner in charge, not the same partner I was referring to earlier, the partner in charge says, bring it back to the office and we'll use it in the office. So it was acceptable to have a jar of honey. But a holiday in Miami is not acceptable. What practical steps can a firm take? It comes down to independence. It comes down to induction. So not independence, education. It comes down to the induction course. Those of you who are members of audit firms may remember those first 2 weeks of your employment where you went on probably an internal course, maybe with other members of the firm from around Central and Eastern Europe, and somebody like me stood in front of you and said, we do not accept. This is part of being an auditor. You do not accept gifts from client companies. Again, I have to hold my hands up and say I'm guilty of this. Not directly guilty, but on the Thursday before I married my wife, she was out on audit and she said, I won't be in tomorrow, I'm getting ready for my wedding on Saturday. And the client said, oh, you're getting married on Saturday. And they went into the warehouse and came back with a bed cover, a bedspread to cover a double bed, and said, please accept this as a gift. And she did. Can you believe that she did accept it? And she came home and said, look what the client has given me. I said, take it back straight away. Drive back there now and take this unwanted gift back. But she didn't. And that was the start of her not paying any attention to what I said. Practical steps, it's education. It's the induction course that all new intakes, certainly of Big Four and probably in the second division, the Grant Thorntons, the Binder Hamlins, the BDOs of this world, it's certainly a routine procedure that the new intake every September is sent on an induction course and is told the basic rules that this is what we do and this is what we don't do, and it's what we don't do which is important. Do you remember that course? Do you remember your first 2 weeks? You do, yeah. Do you remember being told you mustn't have a personal relationship with the chief financial officer? You do. And look what happened. Another threat to independence is the provision of other services to clients. The rules of professional conduct say it's right that members should provide other services. Who better? Who better to provide non-audit services of a financial nature? Who better than a qualified audit firm? The rules say it is right that we should provide other services, but care must be taken not to perform executive functions or take executive decisions. The preparation of the accounting records. The preparation of the accounting records, the preparation of the financial statements is not allowed. You should not be involved in writing up the accounting records and then extracting a trial balance and preparing the financial statements. The preparation of accounting records for a public limited company is only allowed in exceptional circumstances. And again, I was involved in one of those. I was the only person on the audit team. I was the only one on the audit team. It was just me. I went there on the Monday for the subsidiary of a client of a big company. And on the Tuesday, I got a phone call from the partner that said, do you feel competent to finish writing up the accounting records, taking out a trial balance and preparing the financial statements? I said, why? What's the matter with Mr. X? And the partner said, he's not coming in for the next 6 weeks. He's gone to hospital suffering from a severe nervous breakdown. Now that nervous breakdown I don't think was caused by my attendance on Monday, but it certainly drove this man to despair. So I had to finish writing up the accounting records for the year and take out the trial balance and prepare the financial statements. But that's only exceptional circumstances. It's the only time it ever happened to me, but it did happen. What are the benefits of providing other services to clients? What are the drawbacks and how can these be overcome? Now, I'm almost prepared to guarantee that you will only answer half of this question. I'll give you 2 or 3 minutes just to think of what are the benefits of an auditor providing other services. What are the benefits? And I want you to think of 5 points. And then think about what are the drawbacks and how can they be overcome. I want you to think about that. And I'll give you 5 minutes just to jot down notes. Don't write sentences, just write one-word points. Because I'm going to ask you, and then you're going to tell me, you're going to take those one-word notes and fill them out into sentences. Okay, what are the benefits of providing other services? Income, yeah. Income, your fee income will increase. Yep.
Audit company can provide with experience.
Yes, the audit firm has got the experience, otherwise we wouldn't accept the assignment. The audit firm has the experience and the knowledge and the technical ability to provide these other services, and that means then that the client doesn't have to look around for anybody else to provide that service.
And for audit company there is no need to start from the scratch because they know everything about it.
For the audit firm to do the work, it's, as you rightly say, there's no need for them to start from scratch. They're already familiar with the client. So yes, that would be a valid point. Another one? Interesting, isn't it, that it's a way in which you can improve or extend the experience of the members of the audit team, because by sending an assignment team to the client, then you're providing additional experience, which is part of, inverted commas, growing up into being a professional, into being the qualified accountant. So it provides additional range of experiences to show on your CV or to put on your personal employment record. It gives you these additional elements. Something else, it saves the client from paying 2 lots of professionals. Not only do they not have to look for another firm because the audit firm is already there, but the second firm, if the second firm were brought in, would, as you say, it would involve them having a learning exercise, which is expensive, and we can reduce that down to just one firm providing the service. Another benefit is the fact that it will improve our own understanding of the client's affairs. It gives us a greater insight into the activities and matters of the client, the activities of the client. As a result of this other service, we would have a stronger relationship with the client, provided the service is properly given. We'd have a stronger relationship. It will improve this professional interrelationship between auditor and client, and that can only be a good thing. You don't want the client to view the auditor with suspicion, and equally the auditor doesn't want to view the client with suspicion. Having said that, I read just 2 days ago an article in, I think it was Accountancy Age, where the Financial Reporting Council is recommending that auditors should approach assignments with an even greater degree of professional scepticism. That we always approach a client with a healthy degree of professional scepticism, but the article suggested that the healthy degree of professional scepticism is not enough. You're beginning to get into the world where you're saying to yourself, I'm about to visit a client and I'm fully expecting the client to be involved in fraudulent or underhand activities or corrupt activities. If you approach a client or an assignment with an even greater degree of professional scepticism, are you not calling into question the trust that you have to place within the client, and therefore the client also has to place trust in you? So there is a potential drawback to this increase in professional scepticism. What are the benefits of providing other services to clients? I think we've probably covered that. What are the drawbacks? What are the downside? Independence. Yeah, there is the question that the audit firm may be perceived to lack independence. I'm going to sneeze. Oh dear. Thank you. I might have another one yet. I might have another two. They normally come in threes. So it may be that there is a perception that the audit firm is now no longer independent. So that's certainly one. How would you overcome that potential drawback? What steps could you take? What practical steps could you take to ensure that independence is not perceived to be threatened? Yes, all right. Why is it that every time I ask, you're there with the money? You're the money person. Yeah, the fee level. To make sure continually to keep an eye on the fees, to make sure that the overall audit fee plus advisory fee does not get to a stage where it is greater than the advisory 10% stroke 15%. This 10% is interesting. I think it's interesting, or 15% is appropriate. It's interesting because I don't want to lose a client which represents 10% of my income. Do I want to lose a client which represents 9.9% of my income? No, I don't really, do I? So really that 10% should be 9.9, should it? But I'm happy to lose a client representing 9.8% of my income. No, I'm not happy about that either. What about 9.7? At what stage am I happy to lose a client? Well, generally speaking, I'm not happy to lose a client under any circumstance, but the fee income, given that audit firms charge fees on the basis of time spent and seniority of staff, and the charge-out rate is dependent upon the salary of the individual, and a contribution to the overheads of the firm, and a contribution to the partner's profits, given that, then you could argue that you don't want to lose any income, because if you lose any income, then it means there's a greater strain, there's less money available to pay the staff, there's less money by way of contribution to overheads, and there's less profit for the partners. And we're not happy to lose any audit client. Well, some audit clients we are happy to lose. How can these be overcome? Keep an eye on the fee levels, says one of you. Another way in which it can be overcome is by using different staff. So use staff for the assignment who have not previously or not currently been involved in the audit. And again, to comply with professionalism, it would be sensible to have a second partner in charge of the non-audit assignment. So the audit partner, the person in charge of the audit, should not be the same partner who's in charge of this additional assignment. So in that way, we talk about Chinese walls. Chinese walls, when I was growing up, I was taught that indoor, internal walls in a Chinese home were made of paper. Now, they may or they may not be, but that's what we were taught. And they were always known as Chinese walls. And still, Chinese walls within the office suggest that whatever you're doing on your audit desk should be kept confidential away from whatever I'm looking at. I should not have access to your audit clients. And equally, you shouldn't have access to my audit clients. So we have these Chinese walls. They are virtual or metaphysical walls. They're not actually brick walls. So Chinese walls, so that the assignment staff is kept separate from the audit staff. They may be in the same room, they may be in the same open plan office, but in a metaphysical sense, they're kept separate. Give me another drawback. It may be perceived, or there may be a fine line between advice and executive decision making. There may be a fine line in providing these advisory services that you look to be taking decisions, whereas in fact you're giving advice. And that fine line of giving advice and persuading decisions to be taken needs to be overcome. That's a second drawback, and the way that can be overcome again is by having separate teams and separate partners involved, but also by, and it's F8, also by having a separate engagement letter for each non-audit assignment. We have an annual engagement letter anyway that we will send to the client, and the client will accept the terms of our engagement. This is the contract between the auditor and the client, and that's a normal routine matter to do within any audit assignment. But if it's a non-audit assignment, then we need a separate engagement letter again. It's something we're going to come across when we come to the section on assurance services, that for every non-audit assignment there should be a separate one. And then the recommendation, the ISA, goes on and says it is important that an engagement letter should be sent, clearly setting out the extent of the role of the audit advisor, audit assignor, in order that disputes and misunderstandings can be avoided. So this engagement letter sets out the scope and the role and the extent of the auditor's responsibilities in order to protect against the perception that we're lacking independence. Okay, over the page, specialist valuations. Auditors may be asked, before I move on, even to specialist valuations, this thing about who better to carry out non-audit services than the auditor, there is no one better. But the Americans don't allow it. Under the principles of Sarbanes-Oxley, the Americans say, if you're an auditor, you're an auditor, and you're nothing else. You don't do secretarial work, trust work, you don't do advisory work, you don't do management work, accountancy work, you don't do any work except audit work. There is one exception to that, and that's tax. The tax work is an integral element of the preparation of the financial statements, and it doesn't make any sense to have another firm of accountants coming in to do the tax work using the working papers of the auditor to prepare the tax computation. So tax work is acceptable, is allowable under Sarbanes-Oxley. But otherwise it's not. And all of the work under Sarbanes-Oxley is not allowed. And that stretches into Europe and the rest of the world as well. Because if a company, if an audit client is a subsidiary of an American parent, then Sarbanes-Oxley applies to that subsidiary company. So an auditor of a subsidiary company of an American parent cannot do advisory assignments, specialist valuations, secretarial works. You're not allowed to do it. You have to have somebody else involved, another firm. Auditors may be asked to provide specialist valuations which could impair objectivity. They include actuarial valuations, valuations of intellectual property and brands, other intangibles, property, unquoted investments. Specialist valuations is an area which may be applicable to Big Four firms over here in Central Eastern Europe. And again, it's appropriate that we should be involved. The members should be independent when carrying out a specialist valuation, the results of which may be included in financial statements. But you need to be careful. You need to be sure that you're competent, that your fee level doesn't get pushed above the maximum level, that you are experienced, that you are seen to be independent, you have a separate engagement letter to perform it. Second opinions, it says they're often asked. I don't remember personally any audit firm that I've worked for being asked to give a second opinion, but that may be just because I never heard of it. Maybe asked to give an opinion on the application of financial reporting standards or principles to specific circumstances of an entity which you don't audit. As a matter of professional courtesy, the specialist second opinion auditor should communicate with the auditor and say, we have been asked to do this. They can be made aware of any relevant facts. And as a result of your second opinion, you would send a copy of your second opinion with permission to the existing auditor. Code of Ethics, the IFAC Code of Ethics, fundamental principles are similar to ACCA guidance. But ACCA guidance doesn't have confidentiality, whereas the IFAC Code of Ethics does. Integrity, objectivity, professional competence are all as per ACCA. But confidentiality, we should respect the confidentiality of the information acquired. We shouldn't use or disclose it without proper and specific authority to do so, unless we're required by law, in which case that's proper authority, or a professional right or duty to disclose. Professional rights and duties, that's interesting as well. Under, I think it's the Proceeds of Crime Act in the UK, I think it's the Proceeds of Crime Act, if an auditor or an accountant of a client, not necessarily a company, becomes aware that the client appears to be suppressing and hiding revenue or is overclaiming expenses, the accountant stroke auditor has to notify the relevant authority. Anonymously. They will write, but it will be confidential between the auditor accountant and the relevant authority. And the relevant authority will then take steps to investigate this under declaration of revenue or over declaration of expense. So confidentiality is breached in terms of there are requirements now by law under the Proceeds of Crime Act, but also under the money laundering regulations and insider dealing. If you become aware that someone is insider dealing or money laundering or evading tax, then you have a duty to disclose. And if you don't disclose, then you yourself become criminal. You are a party to the client's illegal criminal activities. And therefore you are also a criminal. And you also could face imprisonment. Not looking at anyone in particular. Just you auditors. Professional behaviour should act in a manner consistent with the good reputation of the profession and should refrain from any conduct which might bring discredit to the profession. And finally, professional accountants should carry out professional services in accordance with relevant technical and professional standards. That's clearly obvious. That previous point, act in a manner which is consistent with the good name of the profession. I don't know whether you are aware of it, but accountants are tend to be put on a pedestal by the public. Accountants, like policemen in the UK used to be, until I got older and I realised that they're only little boys, or big boys. You had respect for these other people. You had respect for doctors, for the medical profession. You had respect for solicitors, heaven knows why. You had respect for accountants and for professionals generally. And people, have you ever been to a party where someone says, do you work? What's your job? And you say, I'm chief accountant at so-and-so, or I'm an accountant, training to be an accountant. And the people at the party that you've never met before say, oh, I could never do mathematics at school. Have you seen that? Yep. I could never do mathematics at school. And you say, well, no, nor could I actually. And accounting is hardly any mathematics. It's all, any computations are done either by computer or by calculator. So mathematics is not a fundamental skill which is necessary for accountants. People have a total misconception about the role of accountants and auditors. They also say you must know all the tricks, how to manipulate the figures and be creative in your accounting. And you must be able to add up phenomenally quickly. You must have a column of figures, you just add it up. And it's a total misconception of the world of the professional accountant. But they do, to an extent, they deify us, they view us as mini-gods. And that's a reputation and an image that the profession would like to keep. They would like the world at large to have and show a degree of respect to the profession. But if they do, you have to earn that respect. You have to act as though you were an accountant. You have to say, I'm sorry, I'm not allowed to talk with you because I may disclose confidential information about my clients. You have to uphold the good name of the profession. Not bring... There are classic examples of accountants who have lost their qualification as a result of conduct not becoming of an accountant. There was a partner from a Big Four firm in London who was late for his train one morning. So he got on the train on the south coast of England and travelled into London. And when he got there, he still not got a ticket because it was in the days before there were ticket salespeople on the train. So he stopped, and when you hand your ticket in to the man at the barrier to get off the station, he said, I'm sorry, I didn't have time to get a ticket this morning, so can I pay now? And the man at the barrier said, where have you come from? And he said, just 2 stops down the line. Instead of from the south coast, 60 miles away, he said, I've just come from 2 stops down the line. So he paid a reduced fee, and he thought, well, this is good. Instead of paying £30 a day for my train ticket, I can get away with just paying £2. And he did it time and again, not every day, that would be greedy, but on a regular, frequent basis. And eventually the ticket collector got suspicious and notified the railway police. The railway police followed him one night and sat on the railway station all night. And at 6 o'clock the following morning, the man arrived to catch the 6:15 train. And he stood there and he waited, and the police watched him. And he got on the train without a ticket, and he said to the ticket collector when he got to London, he said, I'm sorry, I've done it again. Can I pay my £2? And a hand appeared on his shoulder and said, excuse me, sir, can I have a word with you? And he's a partner in a Big Four firm in London with an enormous salary, share of profits, and he's cheating the railway company. Conduct unbecoming of an accountant. You should be seen and you should be honest, trustworthy. It's important. Why? Because the client has to put trust in you. You're going to ask the client all sorts of, not personal, professional questions relating to the financial statements. And the client, aware of the confidential nature of the information that the client holds, will possibly be reluctant to tell the auditor this confidential information. You can't have that. You have to generate a degree of trust in the client so that they know that when they tell you information, they can trust you not to breach that confidentiality, because then they will be forthcoming with the information. If they can't trust you, then they will be less happy to tell you that information. So there is a two-way trust relationship where you have to trust the client with your healthy degree of professional skepticism, but equally the client has to trust you, because if they don't, they won't be open and honest with their responses to your audit questions. Objectives, those are principles of the Code of Ethics. The objectives, the Code recognises that the objectives are to work to the highest standards of professionalism, to attain the highest levels of performance, and generally to meet the public interest requirement. Public interest requirement in P1 says that there is a need for a body of people who are professional, trustworthy, reliable, competent. That's the public requirement of the profession. The objectives require 4 basic needs to be met. Credibility. And the whole of society has a need for credibility in the information that we are auditing. There is a need for reliable information. Society needs it. Professionals have a need for individuals then who can clearly be identified by clients, employers and the world at large as professional people in the accountancy field. Quality, on page 4, the need for assurance that all services obtained are carried out to the highest standards. And confidence. Users of the services should be able to feel confident that we have a code of ethics. Any profession has a code of ethics. The medical profession does, the architect's profession does, solicitors have, estate agents have a code of ethics. They have to comply with those ethics or face the consequences. Professional fees should be a fair reflection of the value of the service performed. They're normally computed on the basis of appropriate rates per hour or per day for the time of each individual engaged on the audit. In reply to public advert or unsolicited request to submit a tender, again there's a recommendation that all public company audits should be subject to tender. And again, in this part of the world, it's my understanding that tendering has become very aggressive to the extent that some audit fees, I heard from a partner of a Big Four firm, not the one represented today, I was talking to a partner of one of the Big Four here, and he said that some of the fees now are at about 30% of what the fee level was 4 years, 5 years ago. But it's a recommendation in Europe that all public companies should now invite tenders, and there should be at least, I seem to remember reading this within the last week, there should be at least 2 submissions, and if the client doesn't choose the cheaper of at least 2, or the cheapest of 3, then the client needs to justify that to the audit committee, or the audit committee needs to justify it to the members. Professional duty of confidentiality. Information acquired in the course of work should not be disclosed to third parties without first obtaining client's permission. But of course there are situations where you must not ask the permission of the client to disclose, for instance in money laundering situation or insider dealing, because you're giving the client the opportunity to remove themselves from the country, put themselves out of the jurisdiction of the relevant authority. So you must not, in some circumstances, you must not ask the client's permission, or tell the client that this is what you're going to do. That will be an illegal act on your part. 2 situations where disclosure without the client's permission needs to be considered. I've just talked about that one. Obligatory, where this is where members are bound to disclose information. It covers situations where we're compelled to disclose under process of law. I've given there an example. They could be served with a court summons. The court may demand your attendance in court. And then when you are asked questions about your client, you can't say, I'm sorry, I'm under the principles of confidentiality, I'm not going to tell you. You can't do that. If a court of law demands information, or you're called as a witness, you have to give that information. I was called as a witness to a person who didn't share offices, but had an office within the same building, and they broke in to my office and stole my letterhead, and then wrote a letter to confirm the income of someone who was applying for a mortgage from a building society. And I got a phone call from the building society that said, "Can you confirm that this is your letter?" And I said, "I know nothing about it. Can you send me a copy of it?" "I know nothing about it." And they were openly criminal and obtaining money by false pretenses. And I was called into court to give evidence. "Is this your client?" "No." Now, I had helped the father of one of these men to prepare his tax return. And they said that it was produced in front of me and said, "Did you prepare this tax return?" I said, "Yes, I did. I prepared it, but I prepared it on information which was given to me. And if you see the signature on the tax return, is the signature of the client's father, of the other person's father, the criminal's father. It's not my signature." And they'd written a letter and signed it, but they'd not signed it Mike Little or M Little. They'd signed it C Little. Now, who the hell C Little? The letter C Little is, I've no idea, but it's not me. So I was able to say, no, this is not my client, but I had to give evidence against these two criminals. Included within that obligatory, I've already mentioned money laundering, insider dealing. I've already mentioned the Proceeds of Crime Act. So those are all included within that obligatory. It is a requirement that you tell. Bribery is another one, under the Bribery Act. It is a requirement that you tell the authorities where you suspect that your client is guilty of these criminal activities. In the public interest, voluntary, situations where you're free to disclose, if it's in the public interest, but there's no definition of public interest. Forget for a moment that you're required to notify the authority where you suspect tax evasion. Forget the moment that you're required to say, is somebody evading tax? And you're not required to notify. Would it be in the public interest that you would notify? Would you claim that that was in the public interest, that a client evading tax should be known because it's contrary to the public interest? Yeah, it is, isn't it? It is in the public interest. Why? Because if they're not paying their fair share of tax, it means that I'm paying more than my fair share, because someone's got to pay the money to keep the infrastructure going. And therefore you could claim that that was in the public interest. There is a warning or advice given by the profession that says, because there's no definition of public interest, you really have to take legal advice before you make that disclosure. You should take legal advice to make sure that you could not then yourself be accused of breaching confidentiality. Disclosure would only be acceptable where it's made to one who has proper interest to receive that information, the proper right to receive that information. You wouldn't, for instance, I wouldn't look at any one of you and knowing that you're evading tax, it would be inappropriate for me to tell any other of you that for instance, Jonas is evading tax. That would be wrong. Because to tell you, you have no right to know that. But if I were to tell the tax authorities, that would be acceptable. To protect a member's interest, if it is suggested or alleged that you are a party to questionable activities of your client, and this allegation is in the public domain, then clearly you want to protect your own name, and in that situation then you are voluntarily going to breach confidentiality. You're going to say, look, this has got nothing to do with me. I was not a party to it, I was not aware of it. So in your own interest, you may wish to defend yourselves against a criminal charge. If you're authorised by statute, you should report non-compliance with law or regulation to the proper authority. It's only relatively recently that the UK took out of their own law that you could be either hanged or sent to Australia for stealing sheep. It's only relatively recently that that's no longer in law. Because if I wanted to go to Australia, all I would have to do is steal a sheep and then I would be sent there free. So it's now no longer part of English law, but it's only relatively recently that that has changed. How did I get there? Non-governmental bodies. And non-governmental bodies, do you know any non-governmental bodies to whom you should make disclosure? Are you aware of any non-governmental bodies to whom disclosure should be made if they ask? Any ideas? ACCA, yeah. If ACCA ask you about your activities, then you have to disclose to the ACCA. You can't say, under the principles of confidentiality, I'm not going to tell you. So a professional organisation making inquiry about you or your client, you have to respond to that. Changes in professional appointments. A prospective client approaches a member to act as auditor. The member should communicate with the existing auditor. I'm on page 4, I don't know where you are. Procedures as follows. Okay, let's do a bit of role playing here. Indra, you are my existing auditor. Ivana, I want to change my existing auditor and I want you to be my new one. I am the client. So I say to Ivana, I'd like you to take over my audit. At the moment, Indra is my auditor, and I would like Ivana to take over my audit. Ivana says, first of all, in your own mind, you have to say, do I want the mic audit? Do I want it? Or am I competent? Am I professional? Am I independent? Is it going to affect my fee levels in terms of the value to be received is greater than 10%? So you have to ask these practical questions first. And if you're happy that you will be independent and you can do the job with due skill, care, diligence and expedition, then you say, Mike, I need your permission to write to your existing auditor. Do I have your permission to write to Indra? And I say, no. And what do you say? What will you say if I refuse your permission? What should she say? No, now isn't that interesting? What she should say is, why? Why? And I'll say, because Indra is actually now in prison for fraud. Or, forgive me here, Indra died last week. I'm sorry. Indra died last week. So you can write to her, but you're not likely to get a response. So there may be a valid reason why I refuse your permission. So you find out what the valid reason is. But if there's no valid reason, so you say why, and I say because I don't want you to, because she and I have fallen out and I owe her some money, or whatever, or because I'm having an affair with her sister, whatever the reason, you then have to determine in your own mind. If it's a valid reason, like death or she's in prison, then you say, okay, fair enough, there's no point in me writing. But if it's not a valid reason, you say, well, I can't accept your invitation. So the only thing I can do is find another person and invite Jonas to take on the audit. And Jonas will say exactly the same questions. Eventually, I run out of potential auditors. So eventually, I have to give someone permission to write to Indra, so long as it's not a death or prison situation. So yes, okay, I will give you the permission to write to Indra. So you write to Indra. What's the terms of your letter? Dear Indra, good to hear that you're back from holiday, maternity leave, and things are good at home. How are you? Are you still busy in the garden? No, it's what's called a professional reasons letter. So you say, Dear Indra, I've been approached by Mike to accept an invitation to become his auditor. I understand that at the moment you hold that position. The reason for this letter, therefore, is to ask if you are aware of any professional reason why I should not accept that invitation. If you're not aware of any professional reason why I should not accept it, would you please send me your last trial balance, the last audited set of financial statements, and any working papers which are relevant to the ongoing audit of Mike. So you send that letter to Indra. Indra receives the letter. What do? Apart from cry, or maybe laugh, because you're now about to lose the audit, what's your reaction? What's the first thing you should do? You should contact me and say, Mike, what have you done? Why are you leaving me? And I say, well, it's time we had a change. I'm not big enough to audit my now multinational. I've approached Ivana, who's got a multinational organisation in her audit firm. I'm wanting to take advantage of the greater resource that she has available through this bigger firm. And because now my company has grown, I think we've outgrown you. So I'm very sorry, and it's been very good working with you, but I think it's time for a change. So you write to me and say, do I have any objection to you responding to Ivana's request? And I say, no, I have no objection at all. So now you reply to Ivana and say, these are the professional reasons, or hopefully there are no professional reasons of which I am aware. Please sign the enclosed trial balance, last set of accounts, and relevant working papers. And you may pass on copies of your weakness letter to identify the weaknesses that you've identified in previous audits. You may or you may not. So Ivana now receives this reply from you, and Ivana now has to make a decision. Depends on what you have written in your letter. Do you want to accept the invitation to be nominated as auditor? You look at the professional reason letter. Hopefully there will be no professional reasons why you should not accept the invitation. You do. You contact me and say, I've heard from Indra, and I'm pleased to say that, we need to discuss whether or not I am going to accept the invitation to be nominated. Because if you're nominated and appointed and you've not thrashed out the details of how much the fee level is going to be, what your charge-out rates are going to be, what the deadlines and the timing and the reporting requirements are going to be, unless we've sorted that out, then you don't really want to be accepting the invitation. So we'll have a meeting, and then you will formally notify me and say, yes, you're happy to be nominated on the terms of which we've discussed. Then along comes the annual general meeting of Mike Limited, and Mike Limited says to one of the ordinary business elements of the general meeting is to appoint an auditor for the following year. So the resolution number 3 is going to say to discuss and if thought fit to appoint Ivana as the auditor for the coming year. Now it may be, and it happened once, I do remember, between what was now KPMG and a firm called Panel Kerr Forster. Panel Kerr Forster were about to be removed and replaced by KPMG. But the chair, just before the meeting happened, heard rumour that there was a big shareholder who supported Panel Kerr Forster. And so the chair introduced a new alternative resolution. In the event that KPMG are not appointed, then the resolution to appoint Panel Kerr Forster for another year. So it will be on the agenda to appoint Ivana as the auditor for the following year. That thing about Panel Kerr Forster was unusual. It's the only time I've ever seen it happen. So you're appointed. Previously, all you've done is I've invited you, you've accepted the invitation to be nominated. Now the directors, me, is going to put it to the shareholders to accept that nomination and to appoint you. You don't accept appointment. You accept the invitation to be nominated. The resolution is passed, and so I call you and say, Ivana, you're in. The job's yours. One of the first things you should do is ask for formal confirmation, not a phone call, but a copy of the resolution that was passed at the general meeting. You want a copy of that resolution which appointed you. I've done the bottom of page 4, top half of page 5. I've done that. Okay, come on, books, documents, papers. General principle is that documents belonging to the client must be given to the client if the client asks for them, or to the client's legal representative if the client's legal representative asks for them. But they have no right of access to documents belonging to the audit firm, and it's a fine distinction. If you're acting as the agent of the client, if you're preparing accounting records, remember it doesn't have to be a public company, so if it's not a company you can prepare the accounting records. If you're preparing the accounting records, you're acting as their agent, and the accounting records therefore belong to the client. Or the tax return is the client's tax return. They sign the tax return and it's their tax return. So you have no right to keep those. You keep a copy of them, obviously, for your own records. But if they ask for them, then you have to provide them with the original documentation. But if you're acting on your own account, preparing audit working papers in order to support an audit opinion, these documents belong to you. And I remember a client of mine who was leaving me by mutual agreement, and he came round and said, I've come round to collect all my records. He phoned me up and said he was going to come round that evening to collect all the records. So I got his files down from the filing cabinet and looked through them, and I had 3 bank statements, I think, and a copy of a contract for him with somebody else. And so I produced these 5 pieces of paper, and he said, is that all you've done? Is that all you've done in 3 years that you've been working for me? I said, no, I've got all my audit working papers, all my papers that are mine, but you can't have those. They're mine. Oh, well, there's nothing here. There's 3 bank statements and a 2-page contract. I said, well, that's all you're entitled to. So it's a fine distinction, and it can lead to misunderstanding and argument or dispute between the client and the accountant. But the client has no rights to the documents that the audit firm produces to support the audit opinion. Audit working papers should be retained for a period sufficient to meet the needs of the practice and in accordance with legal and professional requirements. I think the legal requirement is 6 years. The revenue, the HMRC, Majesty's Revenue and Customs, can look back 6 years to determine if there's any fraud. If there is fraud, or if there is indication of fraud, then they can look back indefinitely. So, although you're required to keep records for 6 years, you'll find that most accountancy firms will put their historic records into archive. They'll archive them and probably keep them in a separate archive store, so that they may have 10, 20, 30 years worth of records for the client, kept just in case there happens to be fraud alleged and the revenue is sufficiently satisfied that there is sufficient evidence to suggest fraud. Then we can go back historically for as long as the client has been the client of the audit firm. But 6 years is the minimum requirement. Right of lien. What's a lien? Do you remember? We covered this. Certainly we covered it in F4 because it comes up in F4. And if it was me that taught you F8, I would have mentioned it at F8. Did I teach you F8? Yeah? Well, I would have mentioned it then, so you remember what it is. A lien is a possessory right. So, it has come into my possession that I have these records of my client, and it's come into my possession by proper means. So it's not that I've stolen them, I've not broken into the premises and taken them away. They have been given to me voluntarily by the client, and they're the client's records. But the client owes me money and wants their records back, and I want my money, and therefore I'm entitled to keep those records of the client until the money is paid. So I have this possessory right to retain the records of the client. I can't keep things like statutory books, the list of members, the list of directors and secretaries, because they have to be kept at the company's registered office, and therefore I'm not entitled to keep those. But any other records of the client I can keep. But there are provisions, there are provisos that limit my possessory right. For instance, they have to have come into my possession by proper means. They must be the client's records and not the records of somebody related to the client. I must have done work on those records, and the fees which are outstanding are in respect of the work which I have done on those records. So it's quite a limited right of lien. When you compare it, for instance, with the solicitor's right of lien, where they can keep anything belonging to their client in respect of unpaid fees. So if your client has deposited a Rolex watch with the solicitor for safekeeping, and the client now owes the solicitor can keep the Rolex watch. So they have a much wider right of lien. Hotel owners, and this is an accident of history, hotel owners are allowed to keep anything belonging to their guests in respect of unpaid hotel bills. Anything at all, with one exception. And it's an accident of history, as I say, with one exception. And do you remember the exception? The hotel owner cannot keep your horse. They're not allowed to keep possession of your horse. So they can keep all your clothes and all your suitcases and everything else, your briefcase, your working papers, they can keep everything, but they can't keep your horse. And I've got visions of hotel guests with unpaid bills riding away from Novotel, naked. Just let me think about that for a moment. The thought is inspiring. The hotel owners have this wonderful right of, a very, very wide right of lien, but it doesn't apply clearly to auditors. You don't see people walking out of audit offices naked. A lien can't be exercised over books of documents where they have to be kept at the registered office. I've already mentioned. Conflicts of interest, page 6. Conflict between the members and clients' interests. Audit firms must always place their clients' interests before their own. Where you're losing a client and it's a bitter departure, where the client has fallen out with you, and you feel upset about it and you feel non-helpful about it, when Ivana writes to Indra and says, do you have any professional reasons? The fact that you're bitter and upset is not a professional reason. And in fact, you have to give, under the professional rules of conduct, you have to give all possible assistance, because the interests of the client are foremost, they are paramount, they are major. So you should do everything within your power to ensure a smooth transition from the previous auditor to the new auditor. And that involves providing working papers, providing assistance, giving them information about accruals and prepayments and stock and anything which is important for the continuing smooth transition from one firm to another. But that's a professional requirement, it's not a legal requirement. Now, if you choose to breach that requirement, and you say, no, it's a professional requirement, but I'm not happy doing it, okay, the ACCA will get involved. But you would voluntarily want to help. Why would you voluntarily want to be of total assistance where you're about to lose a client? Let's say PwC are about to lose a client to Deloitte's, and PwC don't want to provide that assistance in the smooth transition. You should be. You should want to be actively helpful. Why? Because next week, Deloitte is going to lose one to KPMG, and KPMG are going to lose one to Ernst Young, and Ernst Young are going to lose one to you, and you want the assistance from Ernst Young. And it's only by maintaining this professional level of conduct that you will ensure the smooth transition from one audit firm to another. And that's not only you losing a client, but you expect that same cooperation when you're gaining a client. They should not accept or continue engagements. I'm at the top of page 6. They should not accept or continue in engagements where there are significant conflicts of interest between the firm and the client. If a partner of your firm were to commence a personal relationship with a senior person at the client, well, they should query the advisability of that, because if it is an intense and deep personal relationship, then clearly their independence is very much jeopardized and very much threatened. And so you should not continue in that assignment. Clearly that's got to be a very rare occurrence, but you should give up if there is a conflict of interest, if you feel that your independence is jeopardized, if you think you are no longer seen to be independent, then you should think seriously about giving up the client. Any form of financial gain which accrues or is likely to accrue as a result of engagements other than in the form of fees or other reward or concession properly earned amounts to a significant conflict of interest. There was an exam question where the senior audit person was storing her speedboat in the warehouse of the client, rent-free. Now, clearly there's a conflict of interest. It's a concession which is given by the client to the auditor, allowing her to store her speedboat in the client's premises, in the client's warehouse, and that's a conflict of interest, because the auditor's going to say, well, thank you very much for allowing me to keep my speedboat here. How do you want to treat this particular contentious item? It's seen to be, or is not being seen to be, independent. It's a conflict of interest where the auditor is getting an unwarranted benefit from the client other than in the form of fees or concession properly earned. Conflicts between interests of different clients. I'll just pick two of you. If I am asked by one of you to give advice, for instance, on preparing a tender to do some public works, then fine, I can help you with that. But if before I start another of you says, I've been invited to tender for this contract for public works, then I'm in a serious position. What do I do? Do I say, well, I've already been asked by one, therefore I can't help you? So that's a conflict of interest. I can't help one to the disadvantage of another. And you both of you asked me. In that situation, what I have to do, and it's hurtful, is I have to write to both of you and say, two of you have asked me to help in this particular tender, therefore I can help neither of you. So I lose the fee. If I've already started work, and the second one writes and asks me, then I have to say, I'm very sorry, but last week I was asked and I've already started work, so I can't help you. Can I suggest you go to KPMG and ask their assistance? Now think about that in practical terms. I help one and tell the other one to go to KPMG. If you lose, having gone to KPMG, if you lose, I'm to blame, because the other one has won and I helped them. So you blame me, and that destroys or helps to destroy our relationship. If you win, then you think, well, KPMG won and Mike didn't help the opposition, so maybe I'll move my allegiance, maybe I'll move my work, my audit work, to KPMG, so I lose you as a client. Not only that, but the first one says, KPMG did better than Mike, maybe I should move to KPMG. So I'm in a no-win situation. I'm lose-lose all the way. If two clients ask me to help them with the same tender application, I think sensibly what I ought to do is say, both of you, you go to KPMG, you go to Deloitte's, both of you get independent advice to help you with that tender. And I will maintain my independence as auditor. I'm still on a lose-lose, because you blame me, I sent you to Deloitte's and they didn't help you win. You went to KPMG and you won, and I wasn't prepared to help you. So I lose both ways. Not good. Not good at all. Nothing improper in firms having two or more clients whose interests may conflict, provided the work the firm undertakes is not in itself likely to be the subject of dispute. Should be managed so as to avoid the interests of one client adversely affecting those of another, and where acceptance or continuance would, even with safeguards, materially prejudice the interests of a client, the appointment should not be accepted or continued. The safeguards suggested are that we can manage this conflict. We can use different staff for the two assignments, carry out regular review, have different partners being reported to, have instructions on maintaining confidentiality so that the work carried out by one team is confidential compared with the work. Can you imagine the same audit firm working in conflict for two separate clients, and that one of the members of one of the teams gets access to the working papers of the other team, and it's therefore unfair, it's inside knowledge, and will influence the way in which you prepare your assistance for the other client? There has to be this confidentiality within the office. in the days before computers, when I was a trainee, we had different groups within the firm. There were 6 groups within the firm, and we all had our locking cabinets. And our audit files, every lunchtime, all our audit files went into the locking filing cabinet, and nobody else except members of that team, that group, were able to get access to that. There should be strict confidentiality within the office, and that when you go out for lunch, then your files are kept separate and secure and away from inquiring eyes. Advise one or both to seek additional independent advice. And where a material conflict between clients or potential clients is identified, sufficient disclosure should be made to the clients concerned so they can make an informed decision as to whether to go to another firm. Ask their independent advice. It's not unusual for firms of auditors to specialise, and therefore to specialise within industries or within service arrangements. So, for instance, a firm of auditors may have the reputation of being excellent at bank audits or excellent in construction company audits. And in that situation, there is an advantage, clearly, because the more experience you get in that field, then presumably the more efficient your audit work is going to be. But I remember many, many years ago, before Ernst Young became Ernst Young, there was a firm of accountants called Ernst Winnie, and they were merging with another firm of auditors called Arthur Young, and out of Ernst Winnie, Arthur Young came Ernst Young. And Ernst Winnie were the auditors of Coca-Cola, Arthur Young were the auditors of Pepsi-Cola. And they wrote to all their clients and said, we're pleased to announce the merger of our 2 substantial firms, and we're now one of the big 6, as it was at the time, we're now one of the big 6 audit firms. And Coca-Cola wrote back and said, congratulations on your merger. We have some bad news though. You have to make a choice. You either audit Coca-Cola or you audit Pepsi, but you don't audit both. So they dictated to the audit firm who they could audit, and they couldn't audit both. Another example, Arthur Anderson, before they fell apart, Arthur Anderson audited Bass, the major brewing company, beer makers in the UK. And Bass, as a requirement that Arthur Anderson should audit them, Bass said, you do not audit any other brewery. You audit us, or you can audit everybody else, but you can't do both. Corporate financial advice. The provision of corporate financial advice can give rise to independence problems and conflicts. As long as we can maintain and demonstrate objectivity and integrity, then there's no objection, unless it's in America, because you're not allowed to give that advice in America. All reasonable steps should be taken to avoid conflict. If it's clear that material conflict exists, then you decline to continue as auditors or you decline to continue as financial advisors, but you can't do both.